Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 US market update. Been an awful lot of economic data since the last update. For example, new home sales are through the roof, lumber prices are sky high, and the inventory for new homes is almost non-existent. However, on the other side, New York City saw an increase of over 40% in bankruptcies. In addition, first-time unemployment filers ticked back up again. We had 18 straight weeks where it was over 1 million each week of first-time unemployment filers. It had dropped down a bit, but now it's ticked back to the upside. Not so good for the employment picture. So I'm entitling this recording Crossroads. Let's take a look at the charts and see if it can help us sort it out. Let's start by taking a look at the daily chart of the SPY, paying particular attention to Friday. Looked like Friday was going to be one heck of a wild ride with the news coming in late Thursday night of President Trump's positive test for the coronavirus. Futures down over 500 points right after the news. Came back a little bit, but as you can see, we still open to the downside. We do have two qualified patterns. This is what I was talking about in the intro of the market at a crossroads. So you can see in the last recording, we talked about the next stop being this 61.8% fib corrective level, and that's exactly where we went there on the 24th. Tapped that level, moved back up, had a little bit of a gap, came back down, ran into a little resistance there at the 38.2% level. We're just a touch over bought there from the 10-day moving average. Not a lot, but a little bit. Corrected that on Friday, so we can move the moving averages off there. So where do we go from here? Well, we could continue to finish to the downside. We did complete this zigzag here, moving down to that 61.8% level, but that C wave could extend. We could extend down to the 4. That would be moving down to this the most recent wave 4 target right there. So that's a possibility at this point in time. But also, we have a qualified zigzag to the upside. I think a lot of people would be surprised if we continue to move up with everything going on, with the election around the corner, all the uncertainty that we have at this point in time. But there's your retracement, and there's the possible wave C extension to the upside. So possibility of a continuation down to the previous 4, but also a very qualified, nice looking zigzag that could move higher, which I think would, as I said, confound an awful lot of people. So when you have two qualified patterns like this, a bit of a crossroads, if you will, what do? Well, one of Elliott's rules is follow the higher degree. All right, let's take a look at the weekly chart. We don't do that all that often, but it bears looking at now, I think, and you can see that we're in a wave 3 to the upside. Well, the first thing that I look for when I see a wave 3, whether it's a daily or a weekly chart, is there a zigzag in the wave 3? The difficult thing about a wave 3 is, when is the wave 3 going to end? When is this 4 going to begin? And just as a reminder, this is not projecting this is the wave 4 that has begun. This is saying if the wave 4 begins, that's where the likely target is. But when you take a look at this, and I'm going to show you the fib retracements, and watch the 23.6% line. It's kind of highlighted there for you in gray. See that move down that occurred early in May. Didn't move past the 23.6. It held there. If we move up to the next retracement, also 23.6. And then all the way to the top of the 3, a 23.6% corrective level. So all three of the corrections that occurred within this weekly chart, here, here, and here, are all 23.6% levels. Like to see a 38.2% level. Elliott liked that as well for a corrective zigzag pattern. So basically what we have here is just a plain old uptrend on the weekly chart, still in that wave 3. So this is where we take a look at one of our favored confirming indicators, the DMI, and as you can see, the buyers are actually taking a bit of control here. Moving to the upside, the sellers weakened in the last week. The ADX is still in an area where it could show some strength. It could easily turn back up if the market turns up. And this is where I don't think we're going to have to wait very long. The crossroads thing, I think, will be told very soon. And that's because we're down at the lower trend line. So if this low holds on that trend line of the 25th and we continue to move back to the upside, then we have that qualified upward zigzag in the daily chart. But if we break this trend line, likely we're in the wave 4 and we are moving back to the wave 4 here. So I wanted to show you the weekly chart because I think that's the one that's going to give us the answer. I know that it takes 5 trading days to do that, to show whether or not we're going to hold or move down, but I think the next week tells us an awful lot about where the market goes from here. The dollar, I wanted to share this with you because it's interesting as well. We talked about this pattern way back, so I'm not going to re-go over it, where we had this wave 5 move to the downside, 100% extension in the wave 5. Then we had a little bit of a bounce. Looked like maybe we were headed back up to correct to the previous 4, but an important note to remember, we moved past the 100% level. So when you move past the 100% level in a wave 5, the rule doesn't require a corrective move all the way back to the previous 4. So let's take a look and see where this corrective move went, and right to the 50% level, which means this is a qualified zigzag to the downside in the dollar, where we could potentially move as low as the 88 region on the dollar. Now, is that low enough on the dollar to spur growth in the economy? In the market, or is that to the point where people are going to start worrying about the dollar and feel that that may be showing too much economic weakness and wouldn't be positive for equities? So a little bit of a crossroads here with the pattern on the dollar. It'll have trouble breaking that previous 5 low, but nonetheless, it's a well set up potential zigzag to the downside. So when we're talking about the dollar, we usually talk about the metals as well. And by the way, if you haven't registered for Trade Finder, please look. There should be a link up on the top of your screen. And if not, look in the comments section under the video. You can sign up for Trade Finder. Free. We do it every Tuesday night. So I wanted to show you this. We sent this out as a alert to our subscribers. One of our patented strangles, if you will. Big breakout, really nice SLV pattern. So we had a strangle. This is the day that we close it on the 23rd with the big break to the downside. The very next day, open lower, but close to the upside, and then move back up. And here's the reason. There's that 10-day moving average. So if I walk you back to the day we closed it out, look at that separation between where silver was, the SLV, and the 10-day moving average. Remember the saying, no security in any time frame, because very far away from the 10-day moving average. That's why we chose this point to go ahead and close it out, let the puts generate the gain, and then boom, back up. And you might be saying, well, if you felt like it was going to go back up and hit the 10-day moving average, why close out the entire strangle? Why not hold the calls? Well, the calls were far enough out of the money then that they wouldn't have regained much value. Plus, when you have this separation with the 10-day moving average, there's no guarantee that you correct back up. Sometimes you go sideways and allow the 10-day moving average to come back down. So with that in mind, you had a really nice gain in a short period of time. You can look at the trade review for that on YouTube. And then we take a look at gold. People are always asking, why do you trade SLV and not GLD? Well, we trade both, and we actually have a strangle on GLD as well. But here's one of the reasons I like trading SLV. People talk about, yeah, but that's subject to the market. It moves more. SLV moves in a greater percentage. GLD hasn't moved enough to generate a huge gain in the strangle as silver did, not nearly as much. And we've moved back up. Now we're trying to find out, are we testing the breakout here in gold, or was this a false breakout, and then we're going to move back to the upside? So we'll be watching how GLD performs right here at this lower trend line to figure out this lower trend line here to figure out whether or not we want to add to a long position to the upside in the SLV. So that's going to tell us an awful lot in the early trading days, and that'll be tied to what the dollar does as it normally is. One last thing that I wanted to share with you here is the VIX. Well, looking at the VIX, here we had another one of those descending triangles. Take a look at that. It tried to break out on Friday with that volatility early in the day, but it couldn't hold it. Note where the close was, back down in this trend line of the lower highs. Some of you may look and say, that's just one big old descending triangle. And you could kind of make that argument, but if you do, then you're putting it way out there, and that would mean a lot of sideways bars. The VIX, very low volatility. Maybe that does happen, But at least with the VIX up and the support line at 25, that does give some room for a downside breakout in the VIX if we were to come down and test these lows down around the 20 area. Or do we turn and spike back up and the market sell to the downside? So as you can see, crossroads is a pretty good way to describe where we are. I don't think we're going to have to wait very long to figure out which direction the market goes, but I've enjoyed the dialogue that we're starting to get with these videos with Elliott Wave technical traders. Where do you think we go from here? I'd be interested to hear your opinion as well. Let's keep the dialogue going. And by the way, while you're at it, hit that like button or hit subscribe. You know how YouTube works. Let's invite some other people into the conversation as well. The more the merrier. So leave us a comment. What do you think? Where are we going in this crossroads market? Take care, everybody. Talk to you again soon. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.